Hi everyone, hope you're all doing well, hope you're all having a great weekend and are ready to smash the second quarter of this year. This will be another video breakdown, be scanning the markets to feel what we can expect for next week. Okay, I want to keep this really short, don't want to delay too much. So starting out with the 10-year yield for the USA. Last week we had a really sideways dollar in a way. We had a lot of sideways movement on the 10-year yield, as you can see over here. What did this allow? This allowed all the other currencies against the dollar to just rally, and as the dollar is stagnating, like is moving sideways, we saw a lot of longs, for example on euro. Like euro shot to 1.19, and all of this was due to, I think it was a bank in Germany or something, buying 5 billion euros. We can see that impact also on euro GBP. But coming back to the 10-year yield, we are having really good numbers in terms of CPI, GDP, NFP, like from last week. Like these numbers are looking really nice, so we are expecting some dollar strength coming into next week. So all our setups will be according to that. Taking a look at the dollar index, we can see that it retraced a bit because of this sideways movement on the 10-year yield. We are still maintaining a bullish structure, and the numbers for America, for the USA are quite good, so we do expect it to continue to the upside, at least to 93 again, bouncing off the 92 level as discussed in the previous video. Looking at your USD, we can see how it is reacting to these psychological levels. Okay, we had these two bounces on the 1.16. We had this huge run up to 1.235 and came back below 120 again. We had these two spikes into 120, rejecting, coming to 1.17, and this news of buying 5 billion euros this last week was what caused this big bump on euro. And I really feel that this euro movement is already done. Like this move has happened. We might expect the euro to slow down a bit into this next week, giving some room for the dollar to gain strength, and this also aligns with our GBP USD analysis. As I've talked in the beginning of the month of March in the video breakdown, we do expect it to come into the 1.34 level, 1.35. This is all because of the fear of the third wave in the UK, and we rejected 1.40 like quite heavily with 1, 2, 3, 4, 5 wicks on the daily, 14 candles that remained under 140 after we breached down. And so in terms of psychological levels, it's quite secure to assume that it's coming to 1.35, 1.3450. We did see the break of this trend line that is coming since 23rd of September, and it's all lining, folks. Like we can expect this retracement into tomorrow, Monday, Tuesday morning perhaps. All this because the dollar still has to bounce off 92 level or even come here and bounce. So we always give this Monday to give a bit of breathing room, see what the market has to do, wants to do, what direction does it want to take, and only then we act upon it. So we do expect some sort of like retrace, so the daily or the weekly can create a wick into this region after breaking 137, 138. Okay, but we did have a very bearish candle breaking the structure. On Euro USD we had a big bounce, so we can expect it to just tap into 1.20 perhaps, or just create some sort of retrace candle over here and then roll over to the downside. Because on the short term we do expect the dollar to gain some strength, not on the long term because of inflation and all the problems with printing money, but as the short term, the measures that have been taken with the new administration, it's good for the economy, it's good for the dollar, we see a nice recovery in terms of unemployment and inflation, so we do expect this dollar strength coming into this week and this quarter. So that's the outlook for Euro USD. GBP USD, we are expecting the continuation back down to 1.35. We will keep updated and monitoring into Tuesday morning or Wednesday once we see the dollar rolling to the upside and making its reversal. Australian dollar also giving us a melting scenario, sort to say. Price is still hovering above 1.76, but I don't think it's for the long term. We do expect it to come to 1.75 due to this dollar strength. This is just because psychological level 0.80 was completely tapped and ignored, so it's normal to come back to another psychological level to see if it wants to break or retest, so we can move back. I won't be looking over at these pairs. I'm just gonna cover Euro JPY, as we've been trading this pair quite a lot these past few days. We are trapped between this range 127.5, 133, and we do expect it to continue its upwards momentum. We had two bullish weekly candles, and this last week also closed bullish, with the candle closing above this weekly closes. And the daily also is providing us with that setup. So all we want to see is just a continuation of this bullish momentum, a break of this level, a retest where we will enter, and then a continuation to the upside. Even if it's just until 31.5 or something like that, it's already 100 pips, 150 pips into 132. Okay, this is what we will be seeing. If we do see a rejection of this zone, of course, because Euro is due to lose its strength. Still don't know how the Japanese yen will react, because we also had some Toshiba news coming last week about an acquisition, and this might give USD JPY it's giving it a reversal sign, so we might expect the same into Euro JPY as we lose strength on the Euro USD. Okay, so both these scenarios are still in play. We can be above 130, but it can be just for a short period of time and we reject it into this next week and things just roll over. But we are favoring the upside, of course. Let's see how Euro reacts this week. Gold is having quite a run, and we mentioned in the beginning of March that we were expecting price to breach this 1760 level, take everyone out, and only then roll to the downside. We had the opposite scenario happening, where we came and tapped the lows, and only then we are coming above, so we can trap longs with this double bottom scenario, and only then roll to the downside. This will also play a part with how the dollar is playing out, but we will keep an eye on it. I'm not trading gold at the moment. I'm just expecting all of this to happen, and only then act upon these zones to take it to the downside. GBP AUD, because of gold rising a lot, we had this tap into 1.8265, and due to this daily and weekly candles, we are favoring the downside as the pound will lose strength. We can see that on GBP USD as mentioned, and we do expect, after rejecting 180 psychological level, GBP AUD is due to come to 178 again, or even further down. So this would be the outlook for this week. Let's just take a quick look into what can happen in terms of fundamentals. So this week we will have Powell speaking on Monday. This can give us that bounce off the 92 level that we are expecting. On Tuesday, CPI for the US as well. So this might give us that dollar strength into after London session on Tuesday, as mentioned. Going into Wednesday, not much. Share Powell speaking again. Employment change for the Australian dollar on Thursday, and GDP for China. That will be practically it. So we can expect some reaction of the beginning of this week with the dollar, because the fundamentals that came out last week they are good for the dollar, and the market hasn't reacted yet. So we need to see this reaction for the dollar, and it's also aligning with all the technicals from the pairs against it. So we just need to wait, guys. We just need to wait. We might have on Monday this push to the upside just to create that wick. Also on GBP USD, create that wick. DXY comes into 92, reverses, and we see the reversal on Euro USD, GBP USD, and AUD USD to the downside. So this is what we will be expecting for this week, guys. So guys, I hope you enjoyed this breakdown. Hope you're all ready to smash it this week. We will keep you guys updated on the member zone, so pay attention to the live trading section and to what we are talking in chat. And yeah, let's all have a great weekend, guys. Take care.